Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, Head of Investment Strategy. With an objective to empower you with investment insights, on this program we discuss various perspectives that are shaping the global investment landscape. Over the past year, the manufacturing sector has been in the doldrums, to say the least. This was not just a US or a European phenomenon, but rather a global one. Across the board, the industrial production was weaker than market expectations. The Purchasing Managers' Indices or PMIs were printing numbers below 50, indicating a contraction of activity, and the sentiment around the sector as measured by various surveys has been weak. Now, that is all a matter of the past, as we now believe that the global manufacturing cycle is bottoming out, and this will have implications for the global economy and presents investment opportunities. Manufacturing activity, after having seen a brief slump at the onset of the pandemic in early 2020, recovered rather quickly, while services activity remained impaired due to the COVID-19 related restrictions. In early 2021, the global manufacturing activity as measured by PMIs was at its highest level ever. Subsequently, global factories lost steam as pandemic-related disruptions to supply chains started to bite, and eventually, as the reopening took hold, the global economy rebalanced from goods-led to services-led growth. Especially over the past year, the global manufacturing sector has been contracting due to weaker demand, elevated inflation, and tight labor markets. Not to forget, the manufacturing activity tends to be more cyclical compared to the services sector activity, and the former has shorter cycles compared to the latter. Looking ahead, we think the outlook for the global manufacturing activity is set to improve. Some economic indicators like capital expenditure intentions, South Korean trade volumes, crude steel production, cement production, and railroad and port traffic volumes, those that tend to lead the manufacturing activity, are all pointing to a potential recovery. PMI sub-indices that lead the headline also confirm the potential recovery of the manufacturing sector. This should bode well for the global economic growth. A revival in the manufacturing sector exactly at the time when the services sector activity is slowing means that global economic growth can hold up better for longer. Also, looking at history, we have 13 instances over the past 50 years of a cyclical downturn and recovery in the manufacturing cycle. Bottoming out of activity in the manufacturing sector was a strong positive for risk assets. Global equities, based on the average experience of those 13 instances, gained by more than 20% in 1 year following a cyclical trough in manufacturing activity. However, our extensive analysis shows that this time around, global equities at the headline level may have priced in this potential revival. That is, most asset prices have run ahead of the cycle given the strong performance year to date. Yet, looking beneath the surface, we find opportunity in the consumer goods sector. The consumer goods sector is at the intersection of strong consumer, something we discussed on our podcast last week, and a revival in the manufacturing activity. We believe that the sector is better positioned than the rest of the market for an uptick in manufacturing PMIs. In the recent past, the consumer goods sector outlook was constrained by elevated inflation, supply chain bottlenecks, and labor market distortions, but this may be changing now. Of course, company-specific issues may persist, but the outlook for the sector broadly is brighter. Further, the sector presents a good mix of cyclical and defensive companies, making it less vulnerable to growth shocks. The sector looks attractive on price earnings to growth ratio basis. Positioning of active money into the sector is not stretched either. In summary, we think the outlook for the manufacturing sector is improving after having been quite negative for the past year. This bodes well for the economic growth, but financial markets at the headline level may have priced this in already. However, we find opportunity in the consumer goods sector, which is at the intersection of strong consumer and a revival in the manufacturing activity. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information, please reach out to your contact at ADCB. You can also log on to our website at www.adcbam.com. My name is Kishore Muktinutalapati, and I will be back next week with another episode of Global Investment Insights.